All right, we'll start with news because, guys, news, first of all, had 25% gap stats, okay? Guys, look, 25% gap stats, you zoom out. What is this? Does this look like a good short when you zoom out? No. Go to the daily chart. Does this look like a good short still? Not really, but because we needed to squeeze. Guys, look, strong move up, flag off the 8. This is not a day 2 gap up. This is a flag pattern on an uptrending stock that has already pretty much consolidated 1, 2, 3, 4 days. Breakout. When you open and you're right on top of this breakout level, you can't short that. Can't short that without a squeeze. So when we're making a pre-market prep, we're like, the stock's right here. I'm going to try to short this right here, and it's going to bounce off here and screw me. Now, like I always say, if the stock isn't a good setup off the open, you just need a big squeeze, which it gave you. And then if you say you need a big squeeze, well, you got to go find some levels, right? This level right here at $7 wasn't close enough, in my opinion. That's why I said I bet it's going to break the pre-market high, because I'm looking at these other days, these spike days, and I'm thinking if we're opening right here, it's probably going to be able to push through the pre-market high. This candle wouldn't look right if it was only this big. If this candle popped here and then came back down, that wouldn't look right to me. It needs to extend more. So we're marking off our pivots. And unfortunately, this didn't really have any great pivots where it stopped. It really just had that's not even a good pivot right here. Yes, we have a couple touches, but it's not very clear like this one. It's not very clear like that. And it's not very clear like this one or this one, right? So it is a whole dollar, $8, but I don't love whole dollars without pivots like I on small caps. Large caps, I more love whole dollars without pivots, because I know that when you're talking about investments, like, hey, I want to buy 500 shares of Apple at $220 today or whatever, they don't really care about the chart as much. Small caps, the whole world revolves around the charts. That being said, you guys, so what happened? In the pre-market, we're looking at it. We already know the breakout level is right here. 530 breakout level. We already held it. It showed a big demand. It came back down. Now, if this came back down to here, that would have been a pretty decent long. I wouldn't personally long it right here at 560 when the level's at 30, 40 cents away. That's just too much risk. And unfortunately, the fake breakout of the pre-market high, you can't really call it a fake breakout when it goes fucking 50 cents over it. Because the whole point of a fake breakout is that you can see the fake breakout short right when it falls back below, have very tight risk. If you wait for this to do a fake breakout, you're shorting at 740, you stop 60 cents away, that's not really a fake breakout. The risk reward sucks, right? So the only thing you can do is wait for this to fall back below and then fib bounce. But it never fib bounced, it's just tanked, right? Now, would I consider shorting it lower? Only if it did like what SERV did yesterday. I wouldn't short the bounce because who knows how high it could go. I would only short the bounce lower if this candle went up over this candle and then fell back below. So the only way I would short this on a lower bounce would be if this went like this. If this candle, I can't draw, but if this candle did something like that, if this candle, come on, I can't draw. I want to make it look perfect, but if this candle popped up over this candle right here, now I would short lower. That's the only way. I wouldn't short right here, and I wouldn't short right there. I mean, you can short on a lower high, but it's nowhere near as good as something like that. With the fake breakout, you short where you stop right above. That's a much better way, but obviously there's nothing better than waiting for it to come into lower high position, if it did, especially if it didn't drop this far. If this happened up in here somewhere, or preferably, guys, in a perfect situation, what you'd want to see is the pre-market high is right here. This drops just far enough to make the 61 fib line up with the pre-market high. So that would have been ideal if something like this happened. The most perfect situation would have been it only drops to right here. It bounces back up. Now we're in lower high position and the pre-market high stays as resistance right here. That would be a perfect setup. So that was pretty much all there is. Now, I mean, guys, the other thing, if you're looking to long this and it doesn't come perfectly back down to 530, the only other thing you could do is find a different level. Say like these levels right here. Now, here's an intraday pivot, okay? This is how you should always be looking at stocks. Okay, you know that the daily level's right here. Here's an intra pre-market, the intraday pre-market pivot right here, okay? I muted him. Here's the daily level and then a pre-market low pivot. Now, you can always go like this too. Here's another pivot. Anytime you get a fake breakdown, see right here, you got a fake breakdown on top of the support level. You can use that. It's just not as good as, say, if the price went like this. Ideally, what you'd want to see, this is the real key level from early pre-market plus the real daily level. So ideally, you would have wanted to see this, you guys. You have this level right here. You have the daily level below. This green candle would have came down to here, just like we were just talking about, right? If this candle came down to here, and now this is green, now what do we have here, right? Now we have a fake breakdown at or just above a key daily level, which is also a breakout level. So if you got this fake breakout reclaim, boom, nail that. Or even better, this, reclaim that level, boom, long. But just taking it right here with no fake breakdown and still, 40 cents away, 30 cents away from the key level, that's a little tough. Especially, long and small caps in general is tough, but that's why even if I think they're going to squeeze, I don't pretty much long them because they're usually headaches. Because the reason why I don't long them, guys, is because this is what happens. You get long in a small cap, it goes up, boom, it slams super hard. You get out, then it rips back up. They're just not fun to long. Like, imagine if you long this right here and you want to hold it back to the pre-market high. Look at this. You're gonna hold through this, and then it goes up anyway. Like, they're very, very, very hard to long. Very hard to long. Look at this. You buy it right here, boom. You're like, oh fuck, then it whips back up, boom, and then it goes up. It's just. That's the way they trade. They don't trade smooth and don't trend smooth like large caps. So I'd rather just stay short in them and stay long in large caps. Why would you want to long this when you can long Apple? Honestly. Why would you even be considering looking at this to long when you can long Apple? I mean, that's just crazy. All right. So next we have Serve. And guys, just like I was talking about this morning, this is the problem when you try to long too low. Okay, first of all, look. Yesterday, guys, remember what we were talking about all day yesterday? We wanted to come back to the 4. Why? Well, look. Came back to the 4, came back to the 4, 4, 4, 4. Right? Now, we came back to the 4 already. So far in this whole way up, we've held the 4 the whole way. So what makes me think that this is going to bounce off the 4 and go lower and not higher? So why would I short it super low? Well, the only way I would short it, there's only 2 strategies to short right now, okay? Out of my playbook. Number 1, we already hit the target, so it's not very great. But you could try to use the 10-minute EMAs, or you're looking for a fib bounce. So those are the only 2 A+ strategies, and neither of them are that great because you already hit a target where the stock is known to bounce from. That being said, if it came up to like this pivot and gave you a fake breakout, that would be like maybe a B setup just for a scalp. So, I was watching this right here. It came up and did a fake breakout, fell back below. Right here, started to reject 10 EMAs. I just scalped it. I wasn't going to call it out in the room. I took half off and got stopped out the rest even. That was a shitty trade, right? You already hit the target. It's not even fucking worth trading, honestly. Not even worth it. Unless this morning it spikes straight up to lower high position. Well, then that's a different story because then even though you hit the target here, even though you already hit the target, there's a slim, slim chance that this doesn't go like this. If this spiked up to here there's a slim fucking chance that that doesn't make a top and tail and come back down, because this move is probably over unless a lot of consolidation happens. This is exactly what would happen if this stock spiked this morning. Guaranteed it would end up like this almost 90% of the time. There's no fucking way that this stock, after that sell-off, would spike at the open and break out again. Doesn't happen. Barely ever happens. So this is best setup you could have is right here. A slight gap up, a spike, and then into resistance and dump. So we see this all the time on these kind of setups, but they work better when the red candle, it looks like this. And then the next day, you get the spike back up towards here, and then a green top and tail. Because the fat red day that we already got took it back to the target. Ideally, we would see this on the next day. If this candle was yesterday, then today we would be looking for something like this. Same thing, except this would be a small body candle with a top and tail. Same idea. It would be a slight, well, you want it to be a slight gap up, not down. A slight gap up, not too close to lower high position, but then the candle ends up looking like this at the end of the day. These are all just from back testing you guys and just from seeing the same things over and over again. So if this candle was right here, this candle would be right there. But this huge red candle is not a topping tail daily it's not the beginning of a lower high setup. This is the first red day that came all the way down. A lower high setup is a green day that finishes green but leaves a huge top and tail but still didn't come all the way to the target. So the next day you get a pop back into low high position and then you come down to the target. Sometimes this will pop and turn into a stuff candle and this will turn red, even better. This will turn into a daily stuff candle, which is my favorite, because we got a rejection on day one, and then day two, we get this. We get the pop, we get the slight gap up, we pop into lower high position, and then we get the red stuff candle that just melts down to the target. Daily 8 or daily 4. This is my favorite. Beautiful, beautiful, beautiful. That's if this isn't here, you guys. That's if this candle did what this candle did yesterday, and then you get lower high setup with the stuff and the fucking boom. Okay? Because there's a very slim chance, again, that this kind of top and tail comes all the way down and then spikes back up and breaks out. Slim chance. So, all right. Apple. Guys, look at Apple's fucking daily chart. First of all, we've made a strong move up. Only came back to the 21 once. Strong move up, flag off the 8. Look, strong move up, flag off the 8. Strong move up, flag off the 8. Come back to the 21. Now, we broke the 21. We come back to the 34. I wouldn't just long this right here because, I like to have a little confirmation on these. You can if you get an extension on this day. On this kind of day extension. That's not bad. Maybe not after the stuff right here, but still. If you are going to long these kind of moves, guys, these flushes down, dude, just use the cheat code, right? Use the friggin' cheat code. Look. Well, look at that. Turns green. Boom. Now, I'm watching this, right? I'm watching what's happening. And guys, look, by the way, daily chat, look. Strong move up, flag off the 8, turns green. Boom. Pulls back to the 34, turns green. Boom. But I wasn't watching the Heikenachis on the daily chat. What I was watching. You can use them, but sometimes they give you later entries because they take a while to turn green sometimes. What am I watching? It comes down, it goes up, it comes down, it goes up. Yesterday when I saw this flush, remember, yesterday's watch list, what was it? Buy it at 215 or 216 because I want to get as close to this level as possible. This is the true stop level, guys. This is the true stop because it's the true last place the stock failed to go lower. If that's your stop based on the daily chart, because look, we came down below the 34, we reclaimed it. This is a stop candle, bottom tail candle, all right? After this kind of bottom tail, reclaim the 34, we should not go back below this. If the stock comes down, reclaims it, and then goes back below, it's going to dump because you bag all these longs that came in right here. We don't want that to happen. We want it to start curling. So what happens? Yesterday was the watch list. We're looking for 216 or 215 because these are going to put us close to this level. So this is the buy level right here. 216 or 215 because these are going to put us close to this level. So this is the buy level right here. 216 or 215 because these are going to put us close to this level. So this is the buy level right here. 216 or 215 because these are going to put us close to this level. So this is the buy level right here. 216 or 215 because these are going to put us close to this level. So this is the buy level right here. 216 or 215 because these are going to put us close to this level. So this is the buy level right here. 216 or 215 because these are going to put us close to this level. So this is the buy level right here. 216 or 215 because these are going to put us close to this level. So this is the buy level right here. 216 or 215 because these are going to put us close to this level. So this is the buy level right here. 216 or 215 because these are going to put us close to this level. So this is the buy level right here. 216 or 215 because these are going to put us close to this level. So this green. 215 is even better because it's closer to here. So 215 is another whole dollar. 216 is a whole dollar. But guys, why did I not wait for 215 yesterday? This is another buy level. Okay, now, Heikinachis. So I don't know where it's going to stop, 216 or 215. Guess what? Look, we just got a fake breakdown. And then the Heikinachis turn green. Okay, I don't need to wait for 215 because 216 is the Heikinachis turning green. So I'm long. Now, fast forward to today. All right? Now today, take the Heikinachis back off because it's the price at the open. Now am I watching? Look, today we gap up over this very important levels here. Number one, we have 220 here, which is also a 220 and 221 pretty much we'll call it. This is very key levels. Okay, so now go to the, we're on top of the 10-minute EMAs. We broke out of this range. That is a consolidation accumulation pattern that we broke out of. Okay, now back to the 5-minute charts for day trade setups. 5-minute chart for day trade setups. We're watching in the morning. We know this is our level here, the top of our level from earlier. We marked it out. Now the 5-minute EMAs are going up. The 10-minute EMAs are going up. When the 5-minute EMAs are going up, what is the setup? We want to dip and wick off the 5-minute 2134. As soon as they reclaim, you go long. I thought they screwed us right here because it did a wick down and reclaim, held this level perfectly, right? Also pre-market level that held perfectly. But then at the open, boom, wick down again. As soon as we went back above the 21, long. Barry bottom ticked it right here. I wait, boom, came down, bam, got long right here. Sold 1/3 into the pop. I almost added back at the 5-minute 21 again, but I didn't. When you see this, boom, wick off it, you can add to that. And then we scale out, scale out, scale out. Now, guys, like I said, when the stock breaks the 5-minute 8, I didn't want to hold it back to the 5-minute 21 because it's a day trade. So as soon as we broke this trend, broke the 8, I cut the rest. But then look what happens. 5-minute 21 gives you a nice trade. After the 5-minute 21, what happens? We switch to the 10-minute chart with the pre-market data off because the 5-minute EMAs are now not in play. We already broke the 5-minute EMAs. Now what are we looking for? 5-minute, 10-minute 21. Boom. Gives you a nice little decent J trade. If the 10-minute 21 breaks, the 10-minute 34. After that, if the 10-minute 34 breaks, there is no more bullish intraday setups. That's all there is to it. If the 10-minute 34 breaks, the next setup in the progression of the playbook is what? This is the only next setup in the progression of the playbook, or else it's gone. Unless you get a reclaim or something. If this breaks and the 10-minute EMAs, if this breaks, if the 10-minute EMAs break and then become resistance, right? You're pretty much looking for a secret setup after that. Or you have to go on the hourly EMAs and see if you can get down and it wicks off the hourly 21 or the hourly 34, right? That you can use the hourly EMAs too, but remember when you're doing that, your risk isn't going to be at the exact point that it should be. Ideally, you want to risk off the last place of field, especially if it falls below today's low. So I personally would be looking for fib bounce if it broke that. Even though really the secret setup already happened because look, you guys, stock dumped, it made a higher high right here. Look, we came off a support level on the daily. We made a higher high over this high. The 10-minute EMAs crossed up, and now we look for the fib bounce, which happened the very next day right here. This would be over here, and we would have a secret setup, a perfect entry, risking here, and you're still in the trade, and it's still going. Because this should ultimately go back to where? Ultimately, this should go back to lower high position. At least to the 50 fib in this pivot, I would say. Preferably up to fill this gap up in here. And then maybe even break out again. Because why? Not only on the daily chart. Look, guys. On the weekly chart, which is even more powerful, strong move up, flag off the 8. Strong move up, second flag off the 8. So let's go. Now, obviously, we need the market to help with that a little. Because if the market tanks on like bad earnings, or Apple has bad earnings tomorrow, And this is the other thing, guys, right? If you took the trades today, you don't have a huge cushion for the earnings. If you took it yesterday at 216, well, you have a decent cushion if we can keep pushing before earnings. So, I mean, it's going to depend where it is. Apple's earnings pretty much beat every time, so I'm not that nervous, but I don't want to have it too close to my price that it can just dump right through me. So, that's that. AMD, another trade that I took today. AMD, guys, was a perfect. The only thing that wasn't perfect about AMD is that, remember in the pre-market, I was talking to you guys about a lot of these fading their gaps. AMD was absolutely perfect. The only thing not perfect is that it was earnings. If you guys look at the daily chart, look at AMD. The 8 crossed below the 21.34. First pop back to the 21, which is also a pivot. This is absolutely fucking beautiful. A huge gap up into the 21, the first retest plus a pivot. If this wasn't on earnings, it would be an A+++ short setup. But it was on earnings. So, what happened? When it's on earnings, I don't really like to call those out. It's pro traders only. But look, two things that can happen. Fake breakout of pre-market high into that pivot, which is exactly what happened. Or, right here, lower high position stuff at the open, which is what I traded. I didn't want to overstay my welcome because it is a gap up on earnings. But I saw this push up. It stopped. I shorted it, covered into the wash. And I didn't trade it again on the fake breakout, which I could have, but I didn't. And now look how far it dropped. Faded the whole gap. Why? Because it was a huge gap up back into the freaking daily 21 and an old support that broke. Just really, really nice setup. Really nice setup. Just on earnings, sometimes they can blast through these because it's earnings. So, not my favorite thing on earnings. It looks like Apple's going to push off the 10-minute EMAs nicely. M was a stock that I had on my watch list, but I forgot to go over it in the morning. If you guys look, same setup almost. Same thing as what we just looked at, right? Look, you guys. 8 cross below the 21.34, first pull back to the 21. The only reason why this wasn't perfect is because the pivot was right here. This pivot was right here. I was hoping it would push a little higher, but I wrote on my watch list a fake breakout over yesterday's high. Oh, shit, it almost kind of just did what I was talking about, though. It did it this morning, and it did it now. Look. Well, guys, it kind of didn't still come close enough, but look. This is a gap fill pivot, okay? I marked these baby blue with dotted lines. So, ideally, you would have got this to push a little higher, even though that's kind of not really a fake breakout if it pushes that much higher. So, there's two setups that can happen here. 1, 2, 3 days up. Whenever there's 3 days up in an important level here, I want to see a fake breakout or an extension on the third day into an even better level. So the setup was fake breakout over yesterday's high or a fake breakout spike into that gap fill pivot, which we got to set up at the open. Pop, fake breakout, short. Cover, cover, cover. Now, this spike right here, it didn't come close enough. It did a fake breakout again, but it went decently over, like, not really. I mean, it only went 10 cents over, but I would have wanted that spike to come up to here to the 34 plus the gap fill. If this spike did exactly what it did, but came to 17.75, so if we got this kind of push straight up and it went another 20 cents higher, I would have definitely looked to short that if I was at my desk. It would be a third day. It would be a third day going up. Actually, 1, 2, these are kind of sideways days, but 1, 2, 3. So if this went like this, you guys, a third day spike into that, there's a high chance that this would end up topping tail. Very high chance. 1, 2, 3 day spike into a gap fill. People would take profits from down here. It would close weak, almost guaranteed. You don't get many 3 days that close strong. So all you need is a speed up in price into the level. And then guess what? Guess what? Do you have to guess? No. You speed up in price, then what? Magic. It's like magic. Oh, it's like magic. This didn't even speed up that much, and still, Heikinachis doing their thing. Heikinachis make it so obvious where you have to enter, guys, because they're confirmation. The candle don't turn red unless it gave you good confirmation. And remember, it's a day trade, so we're using the 5-minute chart. We use the 10-minute Heikinachis for swing trades and the 5-minute chart for day trades. But, dude, look at this. Boom. Boom. They just work good. They just work good. It is what it is. You're trying to trade the fucking 5-minute 21.34, maybe right here is trending. You get a green Heikinachis, stop goes below, boom. Pulls back to the 21 again, green Heikinachis, stop goes below, boom. They just work good. They just work good. I mean, the 10-minute ones are even more obvious with the pre-market data off on swings, but you just got to understand, as long as it gets to your level, you guys, you switch to Heikinachis, it's like a cheat code, right? Look at this. 10-minute Heikinachis, never broke the lows again. You entered right there, never put your stop below here, you never got stopped out again, and it's way the fuck up here. You can use them on the hourly chart. You can use them so many ways. Look at this. Look how super clean this is. Super clean. Right? Daily chart. I don't use them much on the daily chart, but still. You can use them everywhere. The reason why I don't use them on the daily chart is because, look, guys. Let's say I want to trade this like 5-minute 21.34, right? Well, this one, even if you entered right here, you probably might have stopped out. It didn't close below the 34, which, remember, if you enter on the 21, you rarely should have your stop a candle close below the 34. But let's say, for example, right here, you wicked off it. Now you're waiting for the green candle. You don't know this is going to close green really until up here. So look at the risk now. That's why I don't use them on the daily chart. So sometimes it works better than that, but sometimes not. Okay. Tesla. Shit, I left my phone in the other room. Okay, guys. So Tesla today was just, I just wanted to show you once again, strong move up, how good it works. I missed the first one, scalped the second one. Look, you guys. 5-minute chart, strong move up, flag off the 8, boom. Strong move up, flag off the 8, boom. Two beautiful. This one was a great. This is the first one, so you can see how. On the first one, you guys, you want to see how fast it whips off it, right? It comes over, you get long, scale out into the highs and see how strong it is. This one right here, boom. You get long, you see the strength, you scale out, and then it starts getting weak. You just take it off before it goes against you. SPY, same thing. Look, you guys. SPY, breaking out of the range, right? So what are we doing? Waiting for it to show us strong move up. It goes, it goes, it goes, boom. This one gave a sick bottom tail, strong move up, flag off the 8, boom. Another one. And then bang, right back to the 5-minute 21, boom. And then after that, you switch to the 10-minute EMAs, like I just said. Pre-market data gets turned off because now you have plenty of price action to look at in the day. Turn off your pre-market data and you're using the 10-minute 21.34. That's it. After that, it's bearish. If it loses the 10-minute EMAs and they become resistance, then it's not a good intraday trade anymore. Okay? That's pretty much it. Those were all the trades that we took, what we were looking at, what we were talking about. Any other here's another one I was considering fading the gap, SMCI. Why? Look, this is a sympathy play, guys. Look. Strong move down, flag off the 8. It's always the same shit. So I know the daily 8 is right here. I know the stock hasn't really touched it yet. It came close a couple of times. So we almost touched it here, we almost touched it here, but we came close. It's a sympathy play, and we're getting a big giant gap up. We know the daily 8 is right here. Right? So what are we looking at? Now 5-minute EMAs, pre-market data on. So, here is the daily 8, you guys, right? Look at this setup. Here is the daily 8. It spikes. It stops short. Boom, boom, boom. Boom. As soon as it starts rejecting, slam back down, you short it. Stop goes above the 8. You could get short 7.15, risking $5. Guess what? 1 2 3 4 almost 5 hours. Even if you missed this rejection, well, guess what? Did it give you a low, a high to short? I think it did. Look. You missed the rejection and happened too fast. You even got a fake breakout trigger in lower high position. Perfect, perfect, perfect. A fake breakout, pretty much stuff candle into lower high position. Short. Now you got a better entry than you had over here because it happened so fast. It just goes up. As soon as it falls back below here, you pretty much got the same entry unless you short it on the way up and you see it. You got, it depends how you trade. If it's spiking up, you got to be careful because it might go through. But if you see it top out, start to reject, you short it, boom, stop goes up here, bam. That's that. That's just, those are sympathy plays that gap up into the EMAs on a downtrending stock are really easy gap fill shorts when they gap up a lot like that. So you don't have to worry. The stock's in a clear downtrend. Guys, look. It's not the one with earnings. It's in a clear downtrend. It broke this. It's downtrending, right? If it pops back, like let's say today it gapped up to here, this pivot in the 21, I would literally trade as much shares as I could shorting that. This was still good, but imagine it gapped up to here, like something really big into this pivot in the 21. The 8 crossed below, first pullback 21. If we had a gap up to here, I would bet my house that this would go like this. Almost literally 90% of the time, that would go like this. It's just the way stocks trade, especially without some amazing earnings to accompany it. I would guarantee you that if this gapped up from here up to here, it would sell off like that almost every time. So you have to understand how stocks move, right? The EMAs are showing you if it's in a downtrend or an uptrend, right? Now, the only thing that made this trade a little less good than A+ was because we got a fake breakdown here before the gap up. But it doesn't matter because the gap up was so big and the EMAs are going down. There's bag holders now. There's people that want to get out. It broke this fucking support, broke that support. This is what happens, all right? So in a perfect world, right, this is dumping like this. It hasn't even touched the 8 yet. It comes down to here. Then some news comes out or earnings or other country, and this gaps up over here like this. This comes down and gaps up this big back to the 8 on someone else's shit. Boom, huge sell-off without all this crap first. Just down, straight back up to the 8 on a huge gap up and then continue dumping. Beautiful. Look at this right here. Same thing. Look at this, you guys. Big dump, pops back up to the 8, another huge drop, right? Fucking, who cares what happens when it gets back to high or low position? You already day traded it from fucking 807 to fucking 718. You think, guys, if I shorted this right here, if I shorted this 8, I wouldn't be taking some profits down here at where it comes down, goes back up, comes back down to high or low right here? Hell yeah, I'm going to take some profits. Oh, all the profits. It's a huge trade, especially for a day trade. If this stays below the 8, it's going to eventually break down again. This has to curl back up to go back to the 21 or it has no chance. If it stays below the 8, all these stocks, if they stay below the 8, they're going to eventually break down again. The only thing that can save them is what? A weekly chart. But guess what? This is why I felt so good about SMCI. SMCI is below the weekly EMAs too. Right? It's not like right here where you have a big dump, but the weekly EMAs are going to hold up. This thing's broke major levels and it's below the weekly EMAs too. So, that's that. NVIDIA fucking curling off the 10-minute EMAs also. Guys, these things are literally like, it's literally automatic when the stocks are trending. Look at this. Look at NVIDIA. Different story, right? NVIDIA. Flag off the 21. Flag off the 21. Second flag off the 21. So look, guys, this is different than SMCI. NVIDIA is below. NVIDIA fell below and gapped up. But did I try a short NVIDIA? No. Why did I not try a short NVIDIA and fade the gap? Because NVIDIA's weekly chart is not SMCI. NVIDIA's weekly chart is bullish as fuck, dude. Second time back to the weekly 21. The weekly 21 can overpower the daily chart. SMCI is not getting any help from fucking its weekly chart. Its weekly chart is bearish too. Now, NVIDIA saved by the weekly 21 gapping up now. And got also, guys, gapping up too close to the friggin' this level and the 8. So now what happens? Look what happens now. We take off the pre-market data. Clockwork. Back to the 10-minute 21. Bottom tail long. The only thing that is not ideal about this setup is that we already rejected all these levels right here before we went to the 10-minute 21. In a perfect setup, these levels are up here or up here, and we didn't reach them yet, and we pull back to the 10-minute 21. Beautiful. Yeah, pretty much, except it didn't have as good of levels as Apple right there. NVIDIA doesn't have all this consolidation right below it. See, Apple had all this accumulation right below it. NVIDIA had a pivots right here, but not because, guys, the more volume that is done below it, look, real quick. See this right here? Dude, this is massive support. All this price action done right below the level is massive, massive support. NVIDIA, where'd you go? Where'd you go, NVIDIA? NVIDIA doesn't have that, right? NVIDIA doesn't have any price action below it. It has price action next to it, right here, that could still act as resistance, right? Has all this volume right here that could still, if we dip below it, could act as resistance. But, so not as good as Apple, but you could still, if the 10-minute EMAs are going up and the 5-minute EMAs are going up, and you do have a pivot here, not as good of a trade, but you have multi-touch pivot, you can still take it if you get the wick off the 5-minute EMAs. You definitely don't want to be shorting it. So look, the 5-minute EMAs are going up. This one's a little more different because it gave you the perfect setup and pre-market, and then I wouldn't long it after this huge stuff personally, even though it whipped right back up, but I just wouldn't. This is way too big of a stuff to long it after. But yeah, as long as these are fanned out like this and you have a pivot and your 10-minute EMAs are going up and your 5-minute EMAs are going up, your daily charts or bullish chart is, or weekly chart is bullish as fuck, then you can use the 5-minute EMAs if you get the wick down. So it's the same thing, just not as good. It's the same EMA setup, but it's not as good as Apple because Apple had all that volume support below it. And once you break out of that range, you're pretty much not going to break back into it. So that's that. School is in session. That's any questions about all that? Was that good? I feel like that was pretty good. I don't know. That makes sense, you guys? You're welcome. All right. Let me stop the recording. It's already like 37 minutes.